A lot of grain purchases are being canceled by China. Is that going to happen again and more often? Mike Zuzolo is going to answer you, and yet we are going to talk a lot about the South American crop and several trade issues right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, we have seen some recent cancellations by China on some corn purchases, but perhaps we can relate to some other issues because first, Brazil has been a player in recent years on the corn international market. And secondly, Brazil has started to commit early those contracts, but China is not forced to comply and to promise all what they say. So, do you think those two things are related? That China is trying to assure supply, but at the same time, they don't want to hurt themselves?
Yeah, I think that, and I'll add a third thing that has happened since the WASDE report, Luis, that I think will help fill in a lot of blanks about what's going on. I think China in the short term maybe believes that there's going to be more competition for US corn and US beans, mainly because of Argentina retracting and reversing their decision in the government to add an export tax to their grain exports, and that would include meal and corn and wheat. And I think when you add all this together and then you look at the USDA report and how superficially or on the surface it did not feed the demand bowl, I think that is in part why you're seeing China move in the direction they're moving. Having said that, I think there's a lot of unanswered questions, both from a standpoint of price and from a standpoint of the USDA report. And what I mean by that is USDA came in and increased the Chinese imports by 6.5 million tons for corn. And that ends up being about 250, 260 million bushels. They only increased our exports for corn in the United States by 50 million bushels. And so you have to ask yourself, where's the other 200 million bushels going to come from, especially given that China's futures price is still trading an equivalent of $11 a bushel, literally double what it is at the Board of Trade or at the Chicago Mercantile Exchange. So I am really dubious and skeptical that the Chinese are going to wash out of a lot more, especially in light of the seemingly good conversation, 2-hour conversation that the media is reporting between President Biden and President Xi from China. I think the Chinese need this corn and they need the meal. I think that it goes back to the funds being extremely long, the funds not getting a lot from the USDA to feed their bullish mindset, and the funds taking a pause about whether we may have more competition in South America. And this goes right back to what you were able to help me so well with this past week in doing a report on the South American crop. And my estimates are staying below the USDA's, not just because of vegetation data and rainfall data and some of the January and early February rainfall totals in key provinces, but also because their harvest in soybeans is behind, their planting in Brazil, safrinha corn is behind, and because of what you had reported back on some of these key provinces. So I don't think the trade's reconciled itself yet with a lower supply situation out of South America. And one of the sayings here in this country is maybe the trade is whistling past the graveyard. In other words, they're scared. They just don't want to admit it yet.
Yes, I want to get into more details about the USDA waste report because one thing that we are going to talk further is about the South American crop. but also they did not change the U.S. leftovers. Why do you think is that?
Well, they cut it down by a little bit with that export increase. I think the USDA is trying to support an idea that we are starting to ration corn usage. In the soy complex, they continue to support the idea we're not really rationing soy usage, based both upon their supply and their demand numbers. And so the trade went into the USDA report buying beans and selling corn the last week before the report, roughly speaking, and they were also coming in and looking more at buying corn and selling wheat. And I think the report did the reverse of these two things. And so I think the funds now are reversing spread trade, and equalizing or balancing their positions based upon the numbers. And that's what we continue to see as we head into the end of the week. Now, important in this is the idea that both the soy meal and the corn did take out their February lows, their monthly lows, for the month of February after the USDA report numbers were initiated and were released. So this is an important indicator, and it is a potential warning flag that USDA is correct that the demand is dropping. I'll add one more thing, and I'll go back to this Argentine tax being reversed. One of the things that I noted at the end of the week on, I think it was Thursday's trade, was the Argentine price for corn dropped about $5 a ton. And I think it was in direct relation to this news from the government repealing that tax. Well, the US corn price followed that very quickly, and the Brazilian corn price followed that very quickly. So I think going forward, one of the best indicators, and we've talked about this in soybeans and what the Brazilian Paranagua price is for soybeans, one of the best indicators going forward the rest of this month is the idea of what does South American prices do, especially in Argentina, because if they continue to go lower, that suggests the Argentine producer has corn to sell and has meal to sell, and that could create new lows in the market because of the cash global price, and that Chinese futures market price means less. However, if the South American, especially Argentine corn and meal prices start to go back up as we go into next week, then we could start to assume that the Argentine producer is not selling much because he doesn't have as much to sell, or he's really worried about his new crop supplies and his production. So we're at a real key point right now, I think.
Yes, and you mentioned before a report that I did about the Conab estimates that simply Conab didn't cut any significant numbers for the Brazilian first crop, the summer crop, the summer corn crop, and they raised it, the estimates for the second corn crop. What I am analyzing here is that they are seeing that the corn losses will be small in the southern states, and they think that the prices are going to increase. So in the last stretch, a lot of farmers would increase their surface for the second corn crop.
Yeah, and this is the issue with the government agencies, whether you're talking about Conab or USDA or Sovecon, or whoever it may be from, or the Agriculture Ministry from Russia, I should say. You're going to have the official agencies assume normal weather until proven otherwise. Well, by the time it's proven otherwise, the crop has been permanently damaged and it can't be reversed to where it can get back to an above average crop. I really think we're heading towards that point. I really think that there has been enough weather damage both in Argentina and the Safrinha second crop corn in Brazil, especially in Mato Grosso do Sul, that these areas are not going to be able to have an above average yield. Maybe the acreage base or the land base and planted acreage base is bigger, but I still think that their average yield per hectare in the case of South America is going to be lower than what we've been accustomed to the past couple of years. And I think this is where February is kind of a blind spot for us when it comes to what the crop is actually at. It's really the March estimates that will probably give us a better indication. And I was going to say that and give that as my opinion. I was going to ask you as a follow-up, would you agree that Conab would come on with more real-time data in March, or could they string it out longer?
I think that there will be more cuts because I have seen those crops, and especially the corn crops are really damaged. The soybean crops look very well, and they probably will recover, but there is a lot of damage already done to corn crops, and they have a lot of fall armyworms or leaf hoppers. So that's real damage, and there's no recovery from that.
And this is where the government agencies come in and have to acknowledge that. And, for the USDA, that doesn't happen until maybe July or August. And, the past the worst part of the production phase of the crop cycle. Sometimes they wait until September. And so I think that's what we have to build into our marketing plan. And I'm going to drill this right back into, for the listener and for the person watching this video that's doing marketing. I'm going to drill it right back into the sell and defend model. Why wouldn't you do a sell and defend model when there's so much on the table right now in terms of how big or how small this South American crop is? Because it could control or help control our prices in the futures market going all the way into May or June because of a lack of competition and supply out of South America, or a turn to South America away from the United States by China and other major buyers. It's just that simple. But when I saw on Friday morning that both Costa Rica and I believe Guatemala both bought U.S. corn for the current marketing year, that just is a key indicator to me that South American supplies are not available right now for shipment. And so it's really about that. And that's where this falls into very well that same model type mindset of 2007, 2008, when we had a very strong Chinese demand and we had a very tight South American supply, and the United States was rewarded because their currency, I think their currency, the dollar was actually, I think 15 or 20% lower than where it is right now. So we had even a better situation from an exchange rate standpoint back in that time period, but very similar situation is what we dealt with back then. And we're right in the middle of it right now.
And you mentioned a very important point about Argentina, because you never know, especially under these circumstances of a very aggressive government behind those farmers, because you'll never know what's the real size of the crop, what they are really selling. We have reported already that in those times of high export taxes, a lot of soybeans are smuggled as fake from they are exported to China with fake documents or with a different origin. So you don't know what are the real stocks in Argentina. A lot of is talked about the ghost soybeans or the ghost corn there, and the sell and defend model would be very recommended right now, I guess.
Yeah, this is where it goes back to the upriver price in Argentina specifically. That's going to be our best indicator, I think. If USDA agrees with the private analysts out there like us that China is going to keep buying corn, which they did say that in the USDA report this past week. Not only that, they're going to buy a lot more feed wheat. So they're buying more of both. And I don't think USDA is playing catch up as much as they're acknowledging that the future demand is still there, even at these high price levels. So again, I don't think we're rationing demand that much. We have been in meal a little bit more than probably the corn or the soybeans on a global basis, based upon what I've been keeping track of. But I think this South American crop, we usually have it what we would say in the bag at this point, as far as what the size of it is. We have no idea what the size of this crop is right now, and I think I have to acknowledge that for my producer clients and especially my livestock clients who are buying feed right now without having any protection on, because my protection for the upside ran out as we got into harvest here this past year. So I've really got to be on point now. If we go up another leg, or if we correct here in the month of February, and I think the market could go back up like it did in 2008, I've really got to get those longs in place for my feeders, because this is where you're going to start losing money in the cattle market essentially immediately, because cash cattle are not at the price they need to be to offset these high feed grain prices. Hogs are doing a lot better, but that's because in part of the pork and bean trade. Obviously, with the hogs and the beans going up this week after the report, that pork and bean trade is still very much in play, which suggests the funds are still believing China's demand is still in play. And this is another key indicator for me is if that hog and bean trade continues to go higher together, the trade believes the demand is still in play and China's not going to wash out. And that goes all the way back to your original question. And I'll throw on top of that the fact that copper's made close to an 8-year high this week. So China's demand is not in question here, I don't think, right now.
Yes, that's so true. I have heard also from different sources. Some people are already talking about that we are starting a 2-year cycle for corn. I think that is a little exaggerated, but I think they are more specifically talking about the Chinese demand right now.
Yeah, I think that's a great way to separate it out because we don't know the energy policy. We don't know if wind and solar subsidies will take the place of ethanol subsidies. And I think that's really the bottom line. We can't assume that it's going to be just like 2007, 2008. I'm not saying that. I'm saying it's a good way to look at the market from a risk management perspective because of the peaks and valleys and the sharp turns in the market, and that South America really matters a lot. But we've never been into a situation where the green energy policy may turn on the ethanol market relatively quickly. It may not. I don't know. But that's the key is you just don't know if this cycle and these cycles are really that useful because of all the uncertainty. I mean, we didn't have a pandemic back in 2007, 2008 either. So there's a lot of differences. But my basic point is that between the United States, China, and South America, those three major players were what dictated the crop and dictated the price action for that time period. And I think that's a good way to look at it now, so that you can protect yourself. We have profit per acre for a change. We have profit per head for a change in the agriculture industry. I just don't want to screw it up.
Yes, and one of the risks I think that you probably are you are assuming is that we are going to have a lot more inflation this year because I think the supply side wasn't prepared to reopen the economy. The economy in the U.S. is reopening faster than I think that I at least me I, at least I thought it would reopen. They are talking about stadiums reopening, and Dr. Fauci already said that there will be open season for the vaccines in April, as soon as April. So, what happens with inflation when it's all open again?
Yeah, and I think those are all valid points. I'm a little bit more nervous about the demand side and the macro economy going into springtime. I hope all those things happen. I've been watching hospitalizations go down. We're now down in the United States back to where we were back at Thanksgiving. That's a really nice sign. I'm eager to see an improving economy. I think the big thing that I remembered as you were talking was this past week, the Wall Street Journal had a global economic or global agricultural forum, and I was part of that and participated in that. And I was interested to hear exactly what you were talking about, where a lot of the supply chain people that were involved in this said, we're done with just in time with food. We can't do just in time anymore. We've got to have extra supplies now because the pandemic has taught us how vulnerable our supply chain is. I don't know if the futures market's really caught up with that yet in the long term or in the medium term. So I think that's a very healthy potential inflationary price issue that maybe will keep in the prices for a longer period of time this time around. So I think that's a real valuable point that you make. Now, having said that, if prices spike like they did back in 2010 and 2011 all around the world, like they are in terms of food prices, you're also going to see a big cut in demand a couple of years from now. So we've got to balance this out.
Michael, what about the systemic risk in all of those macroeconomic factors? You mentioned systemic risk several months ago when mainstream economists were not talking about that. So, how big of a factor is systemic risk right now?
Well, I think the systemic risk is going to boil down to the inflation boiling into the interest rates, Luis. I think that's where the greatest systemic risk possibility is at this point, because the debt load we're carrying, both in terms of the sovereign nations that have utilized all this fiscal stimulus to get us out of the pandemic economically and keep us, viable during the pandemic, and also the monetary policy and the kind of debt load we're taking on as corporations and burning through cash in some industries. And so I think systemic risk is very similar to what we dealt with in the late 1970s and mid 1980s, where the interest rate probably is going to dictate how much systemic risk we have.
And we jumped a little bit about wheat. Are you seeing that the U.S. wheat crop right now is going to have a good harvest? We are having a colder winter right now, but do you think the harvest will be good? And do you think how do you think those other commodities are affecting wheat?
Yeah, that's a really good question. It's kind of like South American production for corn and soybeans right now. I could see a pretty dramatic decline in production for hard red wheat in the state of Kansas, in particular, my state. It sounds as though producers have plenty of snow and have a good stand from Wichita, Kansas, up to Nebraska. But as you go west towards Colorado, it's very similar to what you and I talked about last year. It is a very dry, very arid, no snow cover, and very thin, sparse trade or stand right now in wheat. And producers out in those areas, say like in Hays, Kansas, Hutchinson, Kansas, that's kind of the dividing line. Those producers are suggesting to me that they've had wind damage already from those very strong winds from this past fall. So I think the crop is extremely vulnerable to being replanted into corn or soybeans at this point, from say the western half of Kansas to the Colorado border, and even into the Colorado eastern Colorado area. So I don't think the USDA has taken down the crop size enough if we don't change our weather pattern really quickly.
And do you think the producers in the Midwest, especially in the heart of the Corn Belt, they're already doing their decisions regarding the new crop?
Yeah, I was pleased to see that one of the heads of Corteva, who obviously owns Pioneer Seed, they're in my camp as far as more bean acres against corn acres because of price and because of cost of production and because of the extend genetic beans that we have now that have been producing such great results in terms of yield per acre. And so, yeah, I think that the decisions are being made and are being firmed up at this point. The way the crop insurance price is being figured for the United States farmer in the month of February, right here, right now, we're at about a 450 December corn futures base price and about 1150, 1160 base price for the November soybeans. I still think the beans are winning acres at this point, or at least holding on to additional acres. So I'm in the camp where if we're going to be up 4 or 5% in acreage base overall across all the principal crops this spring, the beans are going to be up around 3 to 4. Corn's probably going to be up around 1 to 2. That's kind of the difference between the two that I see right now.
A new prediction from Mike Zuzolo. Mike, thanks a lot for all the analysis.
Thanks for having me, Luis, and thanks for all your information coming out of the South.